Hello friends, Swaraj here. So one of the follower of Finaware, this YouTube channel, Mr. MS Sajwan requested me few days back to make a video on BPCL to do a complete analysis of BPCL, the current stock price and everything. And he did not give me a reason, but I can understand why he wanted me to make this special video on BPCL, because BPCL is in the news. Bharat Petroleum Corporation Limited is a government company. More than 50% of shares are held by Government of India, and Government of India is planning to sell its complete shareholding in BPCL and gather more than 60,000 crores out of it. It is basically a divestment plan. What does government do with divestment money? It basically takes that money and invests in social welfare schemes. It tries to make, every year government comes out with a divestment plan to actually sell some of its assets and gather money from all these assets, so that it doesn't have to borrow money from any other country or some other places for investing in social welfare schemes, because not many countries or not many banks believe in social welfare schemes like India's socialistic schemes. They don't believe. So government of India has to come out with its own plans to gather money for this social welfare. Another question also might come: why is government selling these valuable assets? Because of the government's push towards EV, government has no business to be in oil marketing company business. Because if government is pushing for electric vehicles, definitely the demand for petrol and diesel will come down. So government will be making losses in these businesses. So it's better, until the EV revolution happens in India, government is thinking, let's sell off these assets, book our profit and invest in some other valuable infrastructure for EV or in some good socio welfare scheme. And that, I think, is a very good decision. Schemes. So now, why only BPCL? The news is clear that it is asking bidders to come and bid for its shares. Current price of BPCL as of Friday's closing is 520 rupees. So government has asked all the interested parties to submit their bids by November 4th. Now, after they submit their bids, government will eliminate some of the bidders and try to select only the interested parties, or the parties where the culture of the work culture of BPCL and that buying company matches somewhere. There is no the integration of this new buyer and BPCL will be smooth, and probably it is also trying to ensure that the petrol pump owners who are currently owning BPCL petrol pumps, they are not disturbed by this new transformation. Now, what has happened since is that many names have come out. Many interested parties names have come out. First name obviously is Aramco. Aramco is basically Saudi Arabian. The ruling family of Saudi Arabia owns this company. It is the biggest oil company in the world. Obviously, they have the largest oil reserves with them, and it has a lot of cash lying with it, and it is looking to invest cash in various assets around the world. So few months back, they had an agreement with Reliance Industries to invest in chemical business. It is considered to be one of the biggest party interested to buy BPCL. Now, why it has the highest chances is because Indian government is also looking to have good relationships with Saudi Arabia, because Saudi Arabia can bring in a lot of cash, lot of investments in India, and if government agrees to give a favorable deal to Aramco, the potential of FDI investments in India from Saudi Arabia, and for people who are doing business in Saudi Arabia, the potential of good relationships is very high. So Aramco is considered one of the front runners for this deal. Next is ADNOC. ADNOC is Abu Dhabi National Oil Corporation. Now it is also considered a very close interested parties, and it also has a very high chance of winning this bidding process, because India is basically looking to improve its relationship with all global and especially Middle East countries, because there is a huge working class in Middle East, a huge Indian population in Middle East, and also there is a potential for even further investment from them. So that is considered second runner. Next is British Petroleum. British Petroleum, now ADNOC and Aramco are National Oil Corporation companies, but British Petroleum, Shell, Total, and many other Rosneft and all are private companies basically. So British Petroleum is already invested in with Reliance Industries. They already have a deal and they have invested in Reliance Industries for retail pumps and also the petrochemical business. So there is a less chance for them to additionally do investment through BPCL, but probably they will submit a bid if they get a favorable deal. Next one is Shell. Shell is already invested in India, and it has not been so profitable because the Indian government has always because oil marketing companies always have been a part of politics in India, and that's why it's not favorable for international companies to stay invested in oil marketing companies in India, because if there is even a 1 rupee rise in petrol and diesel prices, it becomes a big issue, big public issue in India. It becomes a big political issue in India. So that's why these private companies are not that much interested to invest in India, because they don't want to have that political hangover on their business. So, but anyways, Shell, I think it already has many pumps and it will be interested to expand its business in India. So I think private oil companies will only be interested in bidding for Bharat Petroleum Corporation or any other oil marketing companies in India, only if there is an assurance from the government that the rules will not change in the future and the petrol and diesel prices will remain totally market controlled. So then next interested party that the name has come up is Total Gas, that is from France. So that has already made a lot of acquisitions all around the globe. They have invested in Africa for $9 billion. They have bought a company there, and now they have also made a deal with Adani Gas for having a joint venture in India in exploring and producing natural gas related assets. So Total is not considered to be a very serious bidder in this process. So these are the names that have come up, and also there is one more name called Sinopec. So that is Chinese petrochemical organization. It also is sitting on a huge cash pile, and it also is looking for all around the globe for investing in various assets. But probably India will not be so open to investment from China, because there is always this capitalistic we are a socio-capital country and they're completely communist country. So this political implication will have a little bit of overhang on this deal. So China, probably they will bid, but they might not be considered. We never know what will happen. Once bids are made on November 4th and government shortlists these companies, then only we'll come to know which companies were serious bidders. Now, the next question obviously comes, what price the bidding will happen, and also why people like Mr. MS Sajwan have been interested in BPCL, because BPCL, since this announcement and even before the announcement of the government that it is interested to sell BPCL to some private player, it has risen from 315 rupees to 520 rupees as of Friday. So there has already been almost 66% rise in the share of BPCL. Can it rise further? And that is the question that has been hanging with many investors. Probably many investors like MS Sajwan might be holding BPCL shares and they want to know if there is further more profit or we should book our profit, or probably people might be interested to make a trade and earn quickly on this news. Now, all I can after I did a detailed analysis, and also I'll discuss this in detail. I can say that already the share has risen 66%, so there is a little potential to grow from here. Because I did an analysis of balance sheet, and now BPCL is having a PE of 19, and it is basically now somewhere near an expensive territory. But when you're buying shares now of BPCL, when you're holding the shares now, you should think from the point of view of the same buyer who is going to come and buy the BPCL shares from the government. So what is the price that he might be thinking? And depending on that price, the future price of BPCL also will depend. I did a study and I found 500 rupees to be a fair value for the share whenever the buyer is going to come and bid. And the closing price on Friday was 520. And if the buyer comes and bids only for 500 rupees per share, the share is going to fall directly from 520 to 500 and probably a little below. So there is a huge risk to buy the shares at this particular level. But there is, when I did a study, there is another aspect to it. BPCL was basically incorporated in 1891 under the British rule, and it has been a very old company. And I'm not saying problem, but it is also a problem and also a boon in disguise. Because what happens is these companies have such a long history, they keep on getting huge cash flows, and what they do is they invest those cash flows in some assets like land banks or somewhere else, some other assets, and those assets become very difficult to be tracked. So that is the reason what will happen is when these companies who want to buy, they will bid and then they will start doing a detailed due diligence. Due diligence means doing a detailed study of BPCL, and these analysts, they might find some assets which are very valuable, and that might become very lucrative for government also, asking for higher price. So there is a chance of like 20% probability that BPCL might be sold to some company at 600 rupees per share also, but that probability is very, very low. Now why am I saying that is because the time frame of doing this deal is only until March. Before March and before the budget comes, government wants to sell off its shares to whichever company is interested and get that money and include it in its budget, so that it can plan something with that money. So before March the deal will be done for sure, and the announcement of finalization might come somewhere between December to January, because obviously there will be discussions and bidding and rebidding, and all this process will keep on happening for a long time. So it will be completely news driven, and my experience says once the final news comes out that this company is buying, XYZ company is buying at so and so price, if the price is higher than the current price, then the stock will jump to that price immediately, and in the following days it will fall, because immediately people who have invested from the beginning will start booking profits, and that is what my experience says. And the dangerous part will be if the deal is done at 500 or below 500, people who are holding the shares right now might make a loss immediately. So people who are currently invested and sitting on good profit, I request them to book at least 60 to 70% of the profit, that is sell 60-70% of the shares. If you want to sell, completely book 100% profit, well and good, but since there is 20% probability that bidding can happen at higher price also, I think you should not keep your existing shares, number of shares, not more than 30% of current holding, and that is the best way to keep the profit in your pocket. New investors who can take risk, who can take risk. I am saying only people who are willing to take a risk should go and buy BPCL at current price, because there is a huge risk. You should keep a stop loss of 490 rupees and keep holding, and as and when the price keeps on growing, as the process keeps on going on, the price might increase or price might stay here or price might fall also. So 590 rupees should be a loss, that is 30 rupees from here. 30 rupees is like some 6% stop loss. So that you should keep, and you should keep on holding the shares, and as the price grows, you should trail your stop loss. The price goes, say suppose to 530, trail your stop loss to 500. The price goes to 550, trail your stop loss to 520. So that is the way you will protect your capital, and your profit will be in your pocket. Me as a person bought the shares at 460 and I exited at 490. I didn't want to risk a lot, and I know I was in the momentum, the profit was in the momentum, and I booked my profit in that momentum. So the profit is safe with me now. Now I don't want to go ahead and invest in it, because as a person I am a very cautious investor and a very cautious trader also. So I am not trading also in that, but I'll keep a watch. But there are opportunities. Are there opportunities other than BPCL? Yes, there is an opportunity in HPCL, Hindustan Petrochemical Corporation Limited. Why? I did a comparison between BPCL and HPCL. So BPCL is trading at a PE, price to earning ratio, of 19 right now, and HPCL is trading at price to earning ratio of 9, and both of them have similar revenues and similar percentages of profit. Balance sheet also similar, and the reach, that means the number of pumps are also similar in number. So there is a potential, if you consider 19 PE to remain same, the price to remain around 500 here, there is a potential for HPCL to double from here. So let's not take double, let's play safe. Let's hope that HPCL will rise at least 50% from here. So the price of HPCL is 323. Yes, 314 basically, sorry. So the price of HPCL is 314 as of Friday closing, and I think it can go easily to 400 will be the first target until next year, and it might go to 450 also from there. So let's take first target, keep a stop loss of 280 rupees and buy HPCL instead of BPCL, because the potential of gain is more in HPCL. Now, why only HPCL? Why not IOC, or why not other companies? You can invest in IOC also if you want, but HPCL, there is a clear-cut basis of being similar companies, similar revenues in HPCL and BPCL. So you should not compare apple to oranges. Here you are able to compare oranges to oranges. So both are similar companies, similar revenues, similar profitability. The difference has been the news, and if government comes out with the news that it is going to sell HPCL also, the price will definitely go to 400 within the next year, that is until the next Diwali. So I'm saying that if you're a long-term investor in BPCL, it's probably very late now to invest in BPCL. Invest in BPCL only after the deal is done and the stock falls. After that, after the stock stabilizes at a lower point, you can again go ahead and buy for a long term, because then BPCL will become a private oil marketing company and there will be no political overhang on it. If you are a trader, if you are willing to go ahead and take a risk at current price, keep a stop loss of 490 rupees and trail the stop loss upwards at every upward price in the share. And there is another opportunity in HPCL, which is a similar company to BPCL, just that it is undervalued from BPCL right now, and HPCL price also will increase because both the companies are same. So there is a arbitrage, that is a difference in valuation, and smart money will move towards HPCL to make the valuation equal for BPCL and HPCL. So that will be a smart way to invest in this news. So that's it from me. If you guys have any other input for me, now Mr. MS Sajwan requested me to make a video on BPCL. I did not make a video on BPCL until now because the stock run was already over, the news was already out. So I don't see a lot of opportunity in it. So that's why I didn't make. But since he requested, I made it, and I found that there is opportunity in HPCL also. So that is the credit completely goes to Mr. MS Sajwan, and I want more such followers to give me inputs so that it helps me improving myself also, helps improving this channel, and helps people helps me find out new opportunities also. So the participation is very welcome. Like my videos if you like it. If you don't like, leave a comment to help me improve. If you like, you share it with some other of your friends, and also ask them to become the subscriber to the channel, so that they can also gain a little bit of benefit from whatever I am saying. Thank you very much, and I am waiting for your inputs.